I'd like to welcome everybody to the Pardee Center. We have what I think is going to be a fascinating discussion today on remittances for post-conflict reconstruction and development. What you're going to hear is a discussion of research that's done by a task force that was jointly convened by the Pardee Center and by the Center for Finance, Law, and Policy just down the street. This is a copy of the first report that the task force produced. And it's already created sort of a tremendous tidal wave of interest in the institutions that are meant to regulate these kinds of financial transfers. I'm not going to spend very much time here, but I did want to welcome people. Thank you in advance for your time and attention, and I'm going to hand the microphone over to Don Terry.
Thank you, Tony. I'm also not going to spend a lot of time because we want to get to the main part of today's discussion. Will be what's in this groundbreaking, you always hear the word groundbreaking books, but this is really the first time that the issue of remittances through the prism of post-conflict societies has been done. And this is the work product of Professor Harris and David rodima-taylor as well. And then we have Professor Nikos Passas with us from Northeastern, who's been spending years and years, not as successfully as he would have hoped, but still it's out there, and without him, nobody would be talking about it, which is these flows that go to developing countries, and particularly post-conflict countries, oftentimes are being held up unnecessarily, counterproductively, by rules and regulations that are meant to keep us all safe and sound from terrorists and money launderers and all of that sort of thing. But Professor Passas is the leading advocate for somebody, please God, take a look at what this is doing. And his favorite phrase, I should not say his favorite phrase, my favorite phrase is, fighting terror with error doesn't do anybody any good. So with that, I just want to give a sense, because I've been at this for a while. That's 500 billion. When you start running zeros and zeros and zeros and zeros, it's sometimes hard to understand really the scale of that. But we wouldn't be here today, and the discussion about remittances that are taking place all over the world wouldn't be taking place unless it is estimated, and this is probably a conservative estimate, that for this year, 2014, the amount of remittances that will be flowing, mostly from developed countries to developing countries, not exclusively, but mostly from poor people working in developed countries back to their relatives who are even poorer in developing countries, is $500 billion. That's 3 or 4 times the amount of official development assistance that is put together by the United States, the European Union, all the bilateral money, all of the money from the World Bank, all of the money from all of the different organizations. This is 3 or 4 times that. We have taken a look at this over the past 6 months with our task force. The 500 billion is probably conservative. The 125 billion is our best guess. And if I were writing this, I probably wouldn't put down best guess, but it's our best guess as to how much of those flows go into post-conflict societies. And again, when you're talking about post-conflict societies, there seems to be plenty of money for military action in these countries, very little money in terms of economic development. So the remittances that are going into these countries is a significant multiple of the amount of money that's going in from the outside to help these countries economically. So because these numbers are so large, though, the scale is what gets people interested, but because you can't really understand that, I just want to mention this. The key number is 200. That's the typical remittance. And so as we think about remittances, because it's hard to get your brain around 500 billion, even 125 billion, or 125 million, it's $200. It's 250 million people a year sending back typically $200 at a time. That's that 250 million migrant workers who are sending back home about $2,000 a year. That's how you get to 500 billion. 250 million people. If this was a country, these are all adults, this would be the third largest country in the world. More adults than live in the United States, which would be number 3. 250 million people sending these $200 typically about a month. 500 billion. So the issue is, how can we help those families? How can we give them more options to use productively those $200 a month that are coming? So that's what the study is about. And Dr. Passos will talk about how can we facilitate the flows to these countries without making it more difficult and more costly for the money to get there. How do we empower this phenomenon so that it can do an even better job than it is now? So with that, I pass it along to Professor Harris.
Thanks, Don. I must say it's been a pleasure working with this task force, and one of the things you'll see with the report and the Constitution is this is a genuinely multidisciplinary team. I'm an economist, other economists have been involved. Divey's an anthropologist with experience in Tanzania. Don and other collaborators are lawyers, been involved. We've had public health people involved. We've had political science. And so it's sort of a wide range of people and perspectives that we've tried to draw together to look at the issue. Now, there has been a growing amount of work on remittances as a whole to developing countries, but very little has been looked at specifically in this aspect of post-conflict reconstruction. So we thought it was a useful way to get into this. The usual pattern in these conflicts is there's some kind of a civil war, some kind of extended conflict, disturbance, and in many cases, so I'm thinking Liberia and South Sudan and Sierra Leone and earlier El Salvador and Sri Lanka. There's a range, and we've had people looking at case studies on each of those. There's usually some kind of a peace process that breaks out. And the usual things that follow that is some kind of international meetings, of pulling together some kind of a consultative group, and you think about how do we facilitate the flow of foreign aid. And then there's usual concern about how do we try to facilitate the flow of private investment. And then there's constitution issues and truth and reconciliation and civil service reform. Those parts go on. But I have not yet seen one of these peace processes and plans for reconstruction that takes any systematic account of by far the largest block of resources that they have, which are the remittances from the diasporas that were generated as a result of the conflict. And so now we know that there is a lot going back. Some of it is measured through formal channels. A lot more is unmeasured through informal channels, and Divey's going to talk a bit more about this formal versus informal channels. The one thing we know for sure is that what is estimated, which is basically what you can see going through Western Union and MoneyGram and through banks and formal organizations, and then with a little bit of juggling, and the World Bank has had a team doing very, very good work of trying to look a little bit at the gaps of what used to be errors and omissions in the balance of payments and try to allocate, get some sense how much of that might be remittances. Still, we know for sure that these are vast underestimates. And there's been a little bit of systematic surveying going on, and that's what we're hoping in the next part. I just mentioned we're going to be beginning interviewing systematically with diaspora members, particularly Liberians and Sierra Leoneans here in southern New England over the next few months. And then we want to do the follow-up in the countries of receipt. And there's sort of three questions that we have. That is, what is the who is sending what amounts? What channels do they go through, and what is the cost of transferring through those channels? And then the most important issue is, what is the effect on recipients? And how are these funds being used? And what we're hoping is that we're able to identify some ways to use these funds in ways that will be more effectively leveraged for development and tied with financial inclusion. Issues of channeling some through microfinance institutions, micro insurance, and other institutions are what a part of what we're looking at. There's enormous technological change, and within East Africa particularly, and now also West and elsewhere, we've had the development of electronic transfer systems, which are enormously important for remittances from people in urban areas primarily back to remote areas. And when we launched the announcement of this project, we had the governor of the Bank of Bangladesh to talk about how they have been channeling remittances, in particular so that almost 80% of the population now have access to digitally accessible bank accounts, and that they can channel money through there. And not only is this lower cost, it also reduces a lot of the opportunities for leakage in the transfer. So we're hoping to see that work come. As a generalized thing, what you see is that people who have left, are in the diasporas, are sending money back in numbers, primarily to families and close friends. And from the studies that we have, it's disproportionately to siblings. Some to parents, some to wives and children, but channeling back through siblings is an important part. People frequently say, well, that's coming back and it just supports consumption, that's not development. When I hear that, I tend to get rather angry. Because the purpose of development and of Reconstruction is to increase standards of living and to be able to support some increased levels of consumption in countries that have been devastated. And obviously there are multiplier effects as you have more demand for particularly locally produced foodstuffs and goods. That has additional effects. But from the bits of surveys we've got, and I've got one from Sierra Leone, it looks as though about 50% of remittances are being used for immediate consumption. And about a quarter or more is being used for school fees, particularly for secondary school and for university fees. And it's hard to argue that that's not investment. Another chunk goes into better housing. Part of that may be conspicuous consumption, but part also is, again, restoring reasonable shelter in places that have been relatively devastated. And then finally, there's a substantial chunk that seems to be used for investment for buying stock in small businesses. And we hope in next phases that we'll be able to put much more flesh and understanding on those contexts. I'll just mention one other thing that is sort of, we think we've spotted the tip of an iceberg. And whether there really is an iceberg there, we don't know. But particularly with the Liberian diaspora, there's been a lot of activity of raising funds for projects back in home. So sort of linked here and then with really NGOs, Village Part. One that I'm very familiar with is setting up a youth skills training center upcountry in Tapata in Liberia. There's another entrepreneurial support system. Part of this is funds being raised. There's also goods in kind, computers and activity being back. There's also a social remittances that a lot of people in diaspora and particularly young people who are in university are going back for periods of time to work with these. There seems to be a lot of rope through alumni associations of rebuilding schools and facilities. There's a long tradition of village development schemes in West Africa and elsewhere. And again, those kind of mechanisms are being channeled. So the word we now use for that is co-development, that it's schemes not in addition to or some from the remittances to individuals. How large those are, how important they are, how they tie in with other redevelopment, reconstruction schemes, we don't know, but we think there's something important to look at. So with that, I want to turn things over to Divey, who's done the really hard work, and she'll talk a bit more about these channels and formal and informal, etc.
Okay, thank you very much for having me here. It's a pleasure to be here. And I want to say a few words about the main themes of our report and also to discuss some findings and emerging research directions. As mentioned, remittances can be a major catalyst for post-conflict economic and social development, and currently there is a lack of proper understanding of the potentially central role of remittances in post-conflict reconstruction. Because of the predominantly informal nature of remittance delivery mechanisms in post-conflict settings, the importance of remittances in the economies of these regions have been vastly underestimated, as it's already been pointed out here. Now, recent decades have been characterized by profound transformations in violent conflicts and warfare. Conventional war between nation-states has gradually been replaced by a more chaotic and complex dynamic of violence that includes criminal activities, trafficking, and civil unrest. And those repetitive cycles of violence have become primary obstacles to development. The changing nature of violent conflict has also created the need to reconceptualize research and policy approaches to post-conflict settings. The fragility of post-conflict environments necessitates that attention be given to sustainable institution building for remittance systems to be able to contribute to lasting peace. And through attention to broader settings that can provide security and sustenance to those affected in conflict, our report adopted the human security approach to post-conflict development. It recognized that the task of building human resilience requires attention to post-conflict participatory institution building and the role of individual and community in these processes. And that recent focus on a more multifaceted local development also calls attention to various non-traditional actors, such as civil society organizations, women's groups, international NGOs, and so on. Now, just a few words about the peculiarities of remittances in post-conflict environments. Violent conflicts are usually accompanied by displacements of large numbers of population within a relatively short periods of time. And refugees may stay in displacement camps or other neighboring areas for a long time that may result, at least initially, in lower remittances. Remittances in refugee situations are therefore not calculated household diversification strategies. However, conflict refugees have been observed as strongly motivated to remit in many occasions because of the urgent need of those left behind, and remittances often remain a primary source of livelihood as well as development resource in post-conflict environments. Just a few words about post-conflict remittance systems. The peculiarities of these systems, as the studies of our report revealed, could be summarized as following. First, there are some challenges, very specific challenges posed by these conditions of refugee migration. And one of those, or one of the most important ones, is the pervasive informality of remittance delivery channels. In post-conflict situations, formal sector delivery options are very limited or expensive. There is also lack of transparency and little knowledge about existing financial intermediaries. That also causes often little integration of remittance services with other financial products. Data is also lacking of the magnitude of existing remittance flows. However, there are also very specific opportunities present. For example, there are complex informal and semi-formal remittance delivery systems in post-conflict situations that rely on existing social institutions and infrastructural possibilities. And that's often accompanied by a high degree of local innovation and creativity in remittance delivery and use. There is also often, as already mentioned, high remittance inflows and motivated diasporas. And frequently there is alternative, well-developed information communication technology sector present that in turn encourages local entrepreneurship. Recent research in conflict-affected areas in Africa has shown how various informal networks often emerge as alternative forms of governance. And in such conflict networks, public sector actors, militias, and other diverse actors may participate in informal economic activities and trade. And also, the new ICTs or information communication technologies often play an important role in shaping the trans-border ties between those diverse actors. Clan and family-based Somali networks are a case in point that increasingly coordinate economic activities and trade all over East Africa, and have also given rise to a fairly centralized informal Somali remittance transfer system, Havilad. Saying a few words now about bringing an example of one of these informal value transfer systems. So one of the most widespread ones, as already mentioned, is Hawala, which originates in early Middle East and South Asia. And historically, it has emerged as a mechanism for debt transfer to facilitate long-distance trade in conditions of incomplete legal and fiscal frameworks. The historical trade dimension of Hawala has often been underestimated, making it easy to overlook its potentially complex connections to the movements of goods and capital. Hawala arrangements are also characterized by effective self-regulation, as is deeply embedded in cultural and religious traditions. The Hawala network can therefore be likened to such informal financial institutions like rotating savings and credit associations that also arise in the context of insufficient formal financial institutions. Its regulation relies on culturally accepted patterns of mutuality and one's social reputation. Many such contemporary informal remittance networks draw upon quasi-kinship relationships with their clients, but they can be economically very competitive and adaptive in modern conditions. They are on the rise in many parts of the world, particularly in conflict-affected situations, and offer customers clear advantages over formal financial services in terms of cost, security, and outreach. Now, one of the peculiarities of these networks is that they entail complex movements of diverse goods and services as parts of their resettlement processes, and therefore connections to the formal sector are integral to their functioning, as most of the transactions are settled through the formally organized banking system and large exchange houses in the world's financial centers. The workings of the modern-day Hawala therefore present a fascinating combination of highly personalized trust relationships and quasi-kinship reciprocities between individuals, and also anonymous digital capital flows routed through the global banking system. Because of these growing ambiguities between formal and informal remittance transfer systems, attention is called to the processes of institutional evolution, whereby remittance institutions evolve from other social institutions and practices. Particularly in post-conflict contexts, it's important to work with institutions already on the ground and build on those arrangements. Means should also be sought to harmonize and integrate formal and informal remittance sectors. And hopefully Professor Passas will cast more light on those issues when he talks about in his presentation later today. And the formalization of remittance transfer systems should therefore be seen as local and socially embedded. Now, in these processes, the regulatory environment of remittance transfers often poses challenges, and our report suggested that regulatory efforts should consider contextually differentiated and culturally sensitive approaches to remittance systems that exist in post-conflict areas. Flexible and locally adaptable solutions should be sought when regulating transnational remittance flows. As a paper in our collection by a financial regulation attorney, Ray Natter, points out, regulations like the Dodd-Frank Act amendments to the Electronic Funds Transfer Act that was intended to offer protection to US residents sending funds to foreign countries may be difficult to apply in post-conflict contexts where the financial regulatory structure is weak and institutional infrastructures are unstable. The paper suggests that the Consumer Financial Protection Bureau adjust the requirements of certain disclosures about remittance transfers that may render these transfers problematic in post-conflict contexts. And in general, the report suggests that more research and analysis is needed regarding international legislative frameworks that impede migration and resource flows. One topic also that our report paid attention and that also in the course of our work emerged as one of the central topics in post-conflict remittance transfers is the question of financial inclusion. Now, remittances have shown a unique capability for expanding financial inclusion in conflict-affected environments. They facilitate linkages between formal and informal sectors and build on local coping mechanisms and creativity. Economic exclusion is a serious issue in post-conflict communities, and informal and second market activities often emerge as major coping strategies. That highlights the importance of collaborating with diverse local financial associations for post-conflict institution building. Current calls for a broader approach to financial inclusion highlight the relevance of viewing global remittance providers, local financial institutions, as well as informal savings groups as part of a broader financial ecosystem. And there is a need to consider social and cultural norms, behaviors, as well as novel options offered by technology in the workings of that ecosystem. To expand access to remittance services in post-conflict contexts, partnerships should therefore be explored with a wide range of institutions of financial inclusion, including microfinance groups and credit unions, cooperative marketing associations, post offices and mobile banking platforms, local rotating savings and credit groups, and economic groups. And collaboration with all these different organizations that are available on the ground helps keep down the costs of remittance delivery and also expand access through innovative financial products. Currently, various development actors have conducted a lot of interesting projects exploring particularly the potentials of post offices in many parts of Africa, as well as microfinance institutions in channeling remittances. And of course, there are also various issues of limiting regulations that pose challenges to such expansion, particularly in case of non-bank financial institutions regarding their authority as deposit holders in handling foreign currency and so on. So there is a lot of work to be done in that area. Another area related to that that our report found as very significant in improving post-conflict remittance transfers is facilitating the role of mobile remittances in post-conflict development. The use of novel information and communication technologies can help the rural poor benefit from money transfer services in new and productive ways. And in many post-conflict communities, mobile phones are the only means of communication and security. They enable people the continuation of local livelihoods amidst the breakdown of formal institutions and physical infrastructure. In Africa, for example, about 650 million people are currently using mobile phones, whereas only about 20% have access to formal financial services. Mobile money has become available in many African countries only since 2005, but it has already had significant impact in local communities. The basic mobile money applications allow clients to use text messages to store value in a mobile accessible account and transfer value between users. And mobile money platforms like M-Pesa, which originally started in Kenya, where about 17 million users were registered by 2012, and enable the users to pay bills, deposit, withdraw, and transfer money. However, it's also significant to mention that according to several recent surveys, money transfers from individual to individual or remittances remain by far the most widespread function of M-money. Although currently mostly working with internal money transfers, there have also been efforts to institute more transnational money transfers. For example, M-Pesa launched a pilot international mobile money transfer service in 2010, involving partnership with the Western Union. Mobile money presents a new mechanism for the financial inclusion of the poor, offering them means to send and receive money whenever needed. It also reduces considerably remittance delivery costs, increases spread and volume of remittances flowing through formal channels. And there is evidence also that remittances can be effective drivers of M-money usage, as they have a steady customer base and are relatively stable. The development of mobile money transfer systems faces a challenge of facilitating coherent policy and regulatory environment, and that applies particularly to the convergence of telecommunication and financial services that often involve separate regulatory authorities. Our report found that options for bank-based as well as branchless mobile remittance services should both be explored, as they have shown potential for expanding local access to remittances. Particularly developing expansive regional ecosystems for online payments can be seen as the next frontier for innovative remittance services that may benefit particularly post-conflict areas. Now, it's also important to remember that remittances are a profoundly human issue. Remittances are a very private issue. For example, when we were talking to the Boston area African focus groups and African diaspora focus groups, and in our interviews, it was revealed that people consider remittances very important, but also very private and personal issue. And yet it's also something that it's increasingly affected by anonymous global networks and new technologies. We found that more systematic research is needed on both senders and receivers of remittances in post-conflict settings, including the motivations of the senders and the use of the money by the recipients. Questions need attention, for example, like what are the social dynamics of remittances that result from forced migration? Remittance transfers are embedded in social and family relations, and we would like to know how different family members are affected, what are the gender and generational dynamics involved. It's also important to understand how local and culturally determined understandings of debt and obligation operate, and what are the cultural understandings and patterns of indebtedness, mutuality, and reciprocity that affect remittance behavior. In our conversations with the Boston diaspora and African diaspora representatives, again, people they expressed a deep commitment to sending remittances home, and remittances were clearly a very emotional and effective issue to those people. But again, there also seem to be important tensions present between the senders and the recipients in terms of negotiating, sending, and particularly the use of remittances. Our respondents admitted that the priorities between senders and remittance senders and recipients are not always aligned, that people disagree about the use of the remittances, or maybe they are not always revealed to the sending parties. For example, instead of productive investment, remittances may be used for consumption, sometimes conspicuous consumption in a few cases. And in general, that there is not much control of the senders over the use of remittances. Some diaspora representatives even suggested that various more structured institutional frameworks would be helpful to facilitate the productive use of remittances, such as business and skills training, savings and credit services, and various targeted ways of sending remittances. However, it was also very evident that although people don't have complete control over the use of the remittances, they still continue sending remittances. They have very important, profound feelings of obligation and indebtedness that are often culturally and religiously determined. So in general, also saying a few words about some of the important future research topics that emerged from our report. Of course, also the human security issues, we found that they are extremely significant. Some studies also in our report discussed remittances as a potentially adaptive mechanism to multiple social, economic, and environmental crises. For example, there was a study from Pakistan that addressed some of these issues, exploring the connections between building resilience to violent conflict and environmental crises. Also, the impacts of social and economic remittances should be explored in the framework of a heightened vulnerability of refugees and internally displaced persons, human trafficking and smuggling issues, and other vulnerabilities that emerge in the aftermath of violent conflict. And finally, it was also important it is important to note the need for continued interdisciplinary and ethnographic research regarding post-conflict remittances, with a focus on senders as well as receivers, migrant families and communities, but also on local and transnational financial intermediaries, on diaspora co-development organizations, as well as on the role of new technologies, including ICTs, in shaping remittance transfers and affecting local patterns of mutuality and sociality. So definitely more focus on interdisciplinary and applied research is needed to help people find better options for sending, receiving, and benefiting from the remittances. And our report was only one of the very first systematic efforts in this direction.
Thank you, Debbie. Debbie, I'll just pick up on what you said about this as one of the first. It is the first, so, and only so far. So, this is what we now have, thanks in large part to the Pardee Center, and particularly for the Center for Finance, Law, and Policy at BU, which put a lot of emphasis on legal and regulatory issues dealing with the U.S. and the world's financial system. And so this has been, I think, a good first start through the prism of post-conflict. But now we want to turn it over to Professor Pasas, who, when I have heard him speak previously, it gets my blood boiling. So we've had a nice introduction today to the academic issues, the research issues that need to be done. Now we want to pass it over to Professor Pasas, who takes a look at the world's payment systems, the world's legal and regulatory environments, which are intended typically to facilitate the flow of financial resources, money transfers. But at least since September 11th, have done the exact opposite. And since he's a noted professor, he uses words such as counterproductive. I tend to use the words such as ignorant and stupid. But I'll pass this along now to Professor Pasas, who can give us some more heartburn about what's going on out there, but also some possibilities for improving the situation.
Well, thank you very much for inviting me here. Thank you so much for inviting me to add some thoughts to the wonderful study that you have here, which is also going to be a springboard for further good work. And thank you also for reminding me that despite my long-lasting effort to understand illegal markets and organized crime, I have been only modestly successful in smuggling common sense into policy making. So I will go very quickly, and I will have some pictures to keep it alive, but hopefully there will be some points here that we can discuss right after we're done with the presentations. Here is essentially some of the wisdom that came out of studying in the early 90s when the Dutch Ministry of Justice asked me to look into underground banking, which turned out to be not underground and not banking. And the point is that informal ways of making payments internationally are providing an essential service. And yes, they do facilitate serious crime, but as we know, this is not unlike what the formal Western banking sector does, or nurseries. I mean, you can launder money through a nursery just as well. The second sentence, yes, it does have the counterproductive epithet there, but there are a few more. I have found the regulatory efforts inconsistent, misapplied, mismeasured, ineffective, and costly. We've been shooting ourselves in the foot. We haven't done, if we tried to do everything wrongly, we wouldn't have been as successful. So because there is problem in the payment system, and because there is crime facilitation, we do need a modicum of regulation. Sensitive, fact-based, evidence-based regulation. But it has to be contextual, it has to be proportionate to the risk, and it has to reflect an understanding of who are the players, what are the beneficiaries, and who gets victimized when we get it wrong. Unfortunately, we just rushed at the very beginning, in the early 90s, when we did the work with the Dutch. They actually followed the policy recommendations that came out of that report. It was just after 9/11 that things went all over the place, and evidence-free policy making became the sort of norm. But the imperfect knowledge, the lack of understanding of what is it we're regulating, what is it we can accomplish here, is something that needs to be remedied. In Somalia, I'm looking at Somalia, I'm looking at Afghanistan. I have looked at dozens of countries around the world, and I have visited them repeatedly to understand from the users, from the police, from the regulators, and from the senders, what are the mechanics? What is the utility? And what the regulatory changes that we have seen, especially since 9/11, what changes does this bring about? You have to understand that everything that NGOs and international organizations, multilaterals, bilaterals, and so on, do in many wrecked and fragile societies would not be happening were it not for those kinds of informal payment systems. I will show you some illustrations in a few minutes, but a lot of things simply come to a standstill, in addition to the fact that people die when we don't get it right, when those payments cease. And Somalia is just one of the examples of, there are many, many more. Just to focus on Somalia because it continues to be in the news with piracy and other conflict that continues. That makes me wonder. I mean, we use the term post-conflict, but you look at these societies and conflict hasn't stopped. But so you can see who are the beneficiaries of some of these remittance systems. 51% are women. And 65% of what they have actually comes through remittances. This is what they lose when someone makes a mistake in the global north. Most of them are employed, and they account in general of 60% of the average annual income of the recipients, which is about $3,000. Some of the theoretical and policy points I will go very quickly. We can discuss later. But essentially, we're trying to force regulatory formulas that we are pontificating from Washington and from Paris and from London, and we do not understand that legal transplants fail. And the byproduct of a lot of globalizing forces that we have is that we have theater. We have countries that simply comply in order to avoid getting placed on some blacklist and not attracting the bilateral funding and assistance that they receive otherwise. But the point is that nothing happens essentially. The changes are not implemented. Yes, there is a law. Yes, there is an institution, but they're swatting flies and the law doesn't get applied. So that is what actually gets you off the blacklist, while nothing changes with respect to economic policy, better security, or developmental effects on the economy. So while we're trying to turn things more cosmopolitan, we are actually forcing parochialism because they will pretend that they're going along, but in practice they will continue doing what they're doing. The larger context here is that we do that with anti-corruption, we do that with counter-proliferation, we do that with money laundering, terrorism finance, all kinds of efforts in international criminal law and regulation that affects business and security. And that is that what is right and what is legal are not the same. And the further apart they are, the less sustainable efforts for reform and growth are going to be. So we have what I call the lawful but awful practices, and we can spend a whole semester, I use my classes to discuss things that are allowed, and you look at their consequences and they're worse than organized crime. And then you have things that are prohibited by the law, that are unlawful, but extremely useful or even ethical, okay? Then on the other side, we are looking, all crime control efforts that we have are primarily supply side, short term, and with individual cases and claims of success when we just catch a bad guy, put out of business a particular organization. But what drives demand? What generates the profits for illegal flows to move from place to place are neglected. So let me just give you an example of the governance problem, which I think this legality and legitimacy disparity is the central governance challenge that is illustrated by the remittance issues that we're discussing here. What you see here is a bunch of guys. We can understand that what they're doing is not helpful to the car, okay? And it is against good laws that we have in place. I'm not arguing that the laws themselves are bad. Here's an example where you have traffic laws that make sense. But these guys are coming from a village that doesn't have public transportation, and that's the only means they have to go from the village to the work so they can bring some food to the table in the evening. You can claim that you have contemporary laws, and you can have law enforcement that applies that. But the point is that if you go and enforce this and give these guys tickets and prohibit them from doing what they're doing there, they're going to starve. This is the economic disparity. This is the asymmetry that we have, where you have a good law and a sensible law, but it doesn't work here. And it is not only in the Dominican Republic or in the Caribbean that you have that. You can have that in Asia. You can have that in South Asia and so on. People will do what is necessary for survival, what is good for their family, regardless of what the law says. And law enforcement is not going to be out of corruption that they're not going to enforce it. It's out of sympathy because they understand that this law is not going to work in that particular context. We have to prioritize. We have to sequence things. And without a strategy, which is another thing lacking, we're not going to do it. Now, here what you see is this is from the World Bank Sent Money to Africa latest issue in October of 2013. And what you can see is what the average cost of sending money to and from or within Africa is 11.5%. 11.5% is absolutely extortionate. There is no excuse for doing that sort of thing. Only credit card companies do worse than this. Okay, so the Somali companies that operate within a particular part of Africa are charging, despite the much higher regulatory costs they had after 9/11, about 5%. So you can see that despite what they have to do in order to comply with international rules, they are much cheaper than what the banks are. And as you can see, commercial banks continue to be the most expensive type of provider. And when you're talking about hundreds of billions of dollars moving about, I suspect you can find some synergies and economies of scale to make it a little cheaper. So this is what is being, $10 to send $200 to Somalia. You can see that the remitting companies, the Habshil and others that you have in Somalia, are much, much cheaper than otherwise. This is confirmed by research that I did over the number of years in the Middle East. I looked at how much would it cost to send $100 to a number of South Asian countries. This is an example of $100 to Pakistan. And I compared different payment methods with the total amount of money that I would have to spend to send the $100 and how many rupees my recipient, my beneficiary, would receive on the other end. You can see that you have the electronic transfer from money changer, the bank, a draft or a check, Western Union, and Hawala. And you can see that Hawala, hands down, there's an economic rationale why people are using it. It is the cheapest, the lowest cost, $100, and the highest number of rupees that my cousin is going to receive in Karachi or wherever it is that he resides. So on top of that, of course, is the convenience. I'm working on a construction site in Dubai, building the tallest building in the world, so that then James Bond can go and do his thing. And somebody comes, speaks my language, and comes and says, hey guys, do you have money to send back home? And when I left home, that's the human aspect that David was talking about. I left home because I was the older son of the family. I wanted to look after my extended family. I went to the local Hawala operator and said, look, I'll be sending every month this money. I want you to make sure that my family is looked after. My family do not speak English, perhaps. My family do not know how to read or write, but they know that this guy is going to come every month and give them what they need in order to survive. And then his counterpart is coming to my construction site, picks up the cash. I don't even have to have a shower to go into a bank. And within 24 hours, the money is in the hands of my mother. Now, beat that business model. Even if Citibank opens an account or a branch in my village, why would I do business with them? They're going to charge an arm and a leg, or we'll have to sign all kinds of paperwork. Most of it I will not understand or bother to read. It's going to be too costly. It will take too much time to get there. It is a much better business model that we should be learning from, okay? Now, despite that, it's illegal in most countries that you look at. The FATF, Financial Action Task Force, just recently published a report. They found out of the 33 countries that they looked at, 18 of them have completely outlawed the practice of these informal payments. And most of them, as you can see, are developing countries. Why? Because there are capital controls and there are all kinds of other reasons why they do not want to have those operated. But take a look at the United States. The federal regime is actually quite reasonable. You register, keep your records, report anything suspicious, you know your clients, and make sure that you do not do money laundering and report anything that doesn't look all right. It is at the state level that we really drop the ball, because the states require licensing, but the capitalization bond and other costs are completely unreal. Here are some. I haven't updated this for some time, but I looked over the weekend, and the numbers are pretty much the same. These are some of the states with high numbers of migrants. And you can see what kind of net worth and bond requirements are there. So if I operate out of New York, a minimum $500,000 just for the bond. Okay? Then I have a client in New Jersey, another 100,000 or $1 million in order to operate there. It doesn't matter how many clients I have there. I need to have a license from New Jersey as well. I need to comply with their rules as well. And if my agent is in Pennsylvania, there's another $1 million of a bond requirement. That's just the bond. There are registration fees, there are audit fees, there are training fees, there are net worth requirements. There's no way that I can comply with this. I am a corner store helping people to get the money back home. There's no way that we can do this. So, and on top of that, when it comes to money service businesses, MSBs, as the short acronym is, on top of that, US regulators have said these MSBs are high risk for money laundering and terrorism finance. That is all the banks wanted to hear in order to say, you know what? We do not need to do business with these people. It is high risk. We close these accounts and we do not open any new ones. And that is okay with them. Is it based on risk? Well, we will see in a minute, but the Barakat example is one that we can spend weeks talking about, where they were supposedly helping bin Laden and Al-Qaeda with their logistical and financial needs. And as it turned out, there was no basis for that. Still, they were destroyed. It was the best business model, the most successful business that Somalia developed. All right? In addition to that, more recently, what we have is account closings by Sunrise and other banks in the United States. These are the kinds of letters without much explanation, new rules, a risk-based approach and considerations at the bank lead banks to decide we're going to close the Somali remitters accounts. And if anyone applies for them, they will receive this letter that essentially denies the application. Okay? So, and then you go to Afghanistan. This is the underground banking, by the way, of Hawala. And it's like the Italian market, only instead of fruits and vegetables, they sell and buy currency. And this is the bank. I mean, you can see the contrast. That's what's not working. The banks aren't working there. The thriving industry is Hawala. So this is the example of someone who sent 450 euro to his sister in Quetta because she was going to take some university classes. After 6 months, the money had not arrived. He was getting dear customer letters from Western Union, appealing to some kind of Treasury and European Union rules about terrorism finance, not explaining why the money didn't get there. Then he wanted his money back. He wouldn't get his money back. 450 euro was a fortune for both him and his sister in Quetta, Pakistan. And I got a hold of this letter simply because the lawyer came to me for advice, saying, what can we do about this? Right? So the impact is, as you can see, someone said it very well. For them, it's small potatoes, but for us, it's how we feed our families. But there are security implications. When people starve, when people are upset, when people are discriminated, you have economic consequences and you have insecurity, you have radicalization. And when you have this kind of demand that now cannot be met by any legal way, they will find underground, less monitorable ways to do this. So the traceability, the control side of terrorism finance, proliferation, corruption, whatever it is that the agenda we promote is not served. Now, how does it work? Very quickly, the mechanics. I am Marwan, and I'm sending money to my cousin Amjad. I give them money, and within 24 hours, or at the speed of the fax, my cousin receives the equivalent in rupees in Pakistan. What happens is that you are now Boston-based Pakistanis, the senders, bottom left, who want to send money to the family, top right. Okay? You are expatriates sending money to the family. So the money dollars wants to become rupees. On the other end, in Pakistan, you have importers of goods who have rupees, but they need to make payments for what they import. So they have rupees that want to become dollars. So the money will normally go like this, and you have to pay exchange rates, and you have to pay intermediaries, and all the rest of it. What these guys do is take this out, and they take the money of the people here, and they pay the exporters, so the dollars remain dollars. Then they take the money of the importers in Pakistan, and they pay the families of all of you in Pakistan, so the rupees stay rupees. So instead of like this, the money goes like this. It's a beautiful business model that works at the speed of light, and when the flows are symmetrical, there is no need for transferring anything through the banking system or otherwise, because they're never symmetrical. They need to settle up, and they settle through big financial centers around the world. So if I owe somebody $100,000 at the end of the month, I will make that payment in Dubai or in Hong Kong or in New York or in London, right? This is an example of what information is sent at the end of the day. You can see that there is a number, a serial number, and information about who's the remitter and who's the recipient. Okay? Now, this is what makes law enforcement really upset. What you can see here is that 950,000 rupees are going to India from the UK. What is important here is what it says at the bottom left, token number. What that token number says is that you, dear Mohammed, who receives this fax, please give this 950,000 rupees to the person who will come to you with a 10 Indian rupee note that has the serial number on it. That is the customer identification process. And that is what triggers off panic among law enforcement, because they say, we don't know who actually got it. But the point is that traceability is actually better, because Mohammed, who got this, actually knows his customers much better than big banks know theirs. So you can do all kinds of things if you go through the, and they know their counterparts. These are the kinds of records that I'll just go quickly because we do not have the time. Each Hawala operator knows the immediate counterparties and the immediate customers much better than any formal banker and Western banker knows theirs. But the point is that I mentioned that trade gets involved here as well. Here is an example of how money is going to move from left to right. $100,000 that I will transfer magically from left to right. I send an invoice for $150,000 for computer equipment. I receive that money, but what I send is computers that are worth $250. I simply misrepresent the specifications of the computers, better software, memory, whatever it is. Okay? If I do not exaggerate the price disparity, the real value from the declared value, no one is going to smell the rat, because no one is going to open the computers and turn them on to find out if the specifications are the same. My counterpart on the right is going to take these computers, sell them in the local market for the real value, is going to make his profit and the $100,000 that were undervalued in the invoice. So in this way, $100,000 is going to move from here to there. And here is the key point, that although these informal payments are very simple at the beginning, A, B, D, X, you have a lot of intermediaries in between because you have third, fourth, fifth party intermediaries. And that makes economic sense, and that makes for speed, and that makes for risk reduction for participants. But importantly, for crime control, it makes also for traceability, because it's not transparent. We do not know, B doesn't know what happens between C3 and D, for example. But if I'm a law enforcement or other regulator, I will follow these lines, and every step of the way, I will ask the right questions, I will get the right answers. And if I don't get the answers, I know that I got something going. So traceability is actually much better with these networks than it is with a private banking department or correspondent accounts or other instruments in the formal economy. So I don't think we have time to go into policy implications, but I want to say that when it comes to Somalis, for example, in the United States, yes, they do not know always well their counterparties, the agents in Somalia. Yes, there is no regulation on the receiving end. There are things that the Somali government and the remitting companies have to do so that we can come a little bit closer together and we can have the policy implications I will actually have here for you. We need to do better research, the task force. We need to find a more flexible way of regulating when amounts are trivial. What is the risk? Use technology for both controlling and remitting purposes. Understand that the private sector has a big role to play, have to make this much more accessible and lower cost, better competition, institutional capacity need on the receiving end, and not only for regulations, but also for monitoring capacity. There's no point in having laws that we cannot enforce. And we have to bring the data points together. What information they have about remitters from here, with what data they have about payees on the receiving end. These are tasks for development agencies, bilaterals, and USAID kinds of organizations, the World Bank and so on. And consolidate information that we have about trade, because trade is non-transparent, and you can do all kinds of things for serious damage, for serious crime, while we are barking up the wrong tree, the remitters. I will leave these things with you about the additional policy implications, but this is how we're doing things now, and this is how we should be doing things differently, but we keep getting in the way of each other rather than helping each other in this project. Thank you.
Thank you, Professor. We, most of you have finished your chocolate chip cookies by now, but we have another 20 minutes or so for any questions and hopefully some answers. You know, what I take from Professor Passos is not only fighting error with terror, but lawful and awful. In developed countries, the attitude towards hawala is hawala equals money laundering, equals something terrible. As I think we have noted here today, that's not true. And hawala has been around a heck of a lot more longer, doing an efficient job of transferring money across borders to developing countries than, say, Western Union. You might be surprised to know that actually the Western Union opened up its first money transfer operations about 25 years ago. Only 25 years ago. They saw a good business in there, and they've taken it, but hawala's been around for a lot longer than that. So, questions, please. We have 18 minutes.
And if you have questions, if you could wait for the microphone, that would be great. Thank you.
Thank you. This is just terrific stuff. Very evocative of additional questions and ideas. One question I have of very recent history is the collapse of some of the monetary systems, the currency systems, their value in India, in Argentina, and places that are in the BRICS countries, which have different roles in this issue of transfer, because they're both generating income, but also they're generating diasporas who are moving around the world. So what is the effect of the crisis with the peso, the crisis with currencies in these middle-income countries on this process? Because we have a real change of value. Where is the money flowing when you have a decrease in value of one of the currency systems? And my last question is only partially related to that, which is, which Somalia are you talking about? Somaliland or Somalia Mogadishu? And they're very different systems. But thank you very much. It's wonderful stuff.
Hey, you want me to?
Yeah.
Take a look at Panama as far as South America, capital flight, and so on is concerned, and there are other centers. Going back to where the flows are when there's a crisis, when Pakistan tested the bomb, there were all kinds of sanctions, and the liquidity of the country completely dried out because there were sanctions and the formal banking sector couldn't operate. They were saved by Havala, or Hundi as they call it there, because they were the ones who were providing actually funds inflows at the time. When there is, unlike foreign direct investment, when there is crisis, that is when migrant communities are going to intensify contributions because they know that their family needs the support more now. So it is not only growing trend of remittances, but also reliable at times of crisis. It's not like with a mutual fund that are going to pack up and go with the first sign of a correction in the market. I suspect with Venezuela you have similar kind of problems. The crisis that we have with BRIC countries now has been a crisis with Venezuela for some time now. And the trade that they are engaged in with the Caribbean islands and the United States has been essentially funded by MSBs, a lot of it actually not overboard. So you go to Panama and you see the real estate there. It's interesting. When you see the lunch, the evening, take a look at Panama City at night. It is the only city in the world where you have high rises that are dark at night, because there's nobody inside. They buy, and that is where they park the money rather than buy in order to use and live and enjoy that, right? So money flies in other places, but I suspect that with Brazil, Argentina, they're all, in Argentina they call them arbolitos and cuevas. This is the term that they have for informal money service providers. In Brazil, they call them doleiros. Every country, and the black market peso exchange is what we had with Colombia. So depending on what country you look at, they will have different names for similar mechanics. And the mechanics bring together trade, investment, capital flight, tax evasion, and money laundering. So this is where and corruption, bribery payments. So yes, there is the formal and informal come together. There is no study on what is happening with doleiros or cuevas and arbolitos in Argentina. There are some studies about South Asian countries. But we can't, I mean, we tried. Econometricians, although I can tell you that I'm not particularly fond of their methods, we tried with every kind of method that you can imagine with the World Bank and the IMF to calculate the informal flows. And there is no way of doing that unless there is a household survey and you can have a decent sample of the recipients. You cannot calculate that. But what you have in South Asia, Bangladesh included, despite the growth, and Pakistan has seen a growth of formal registered remittances, they have outlawed this kind of practice for ages. All they have managed to do is render the Havala system much more flexible and resistant to controls. On the other hand, when law enforcement controllers want to actually get something done, like the Mumbai bombings or the attacks of the Indian parliament or money laundering through Dubai and other places, they did it because they worked together with Hawala operators. And as far as Somalia is concerned, yes, there are all kinds of changes, but there are about 18 companies that are serving the entire, and it is not only Somaliland and the north and the south and the three parts of you have Eritrea and you have Kenya and you have the whole Horn of Africa that is served by Dahabshil and the other companies that are there. But the method is exactly the same. And the financial capital, the hub of that activity is actually Dubai, because the money will go to Dubai and then trade is going to make the payments in the different parts of the Horn.
I have a quick response based on econometric evidence. One thing, when we've got one good study recently in the American Economic Review looking at remittances to Mexico. Okay, that's not post-conflict, this area. And there's very strong evidence there that when the peso gets stronger, then people send less because you need fewer dollars to provide the same support to your family, and there's some adjustment of not working as much. There's the hours worked. And so immigrants work a little bit less, do a little less second job because they do it. When the peso falls, they work more and send more because it takes more dollars now to provide the same amount. I expect that's happening. The question is how important are the BRICS that are recently having these big devaluations as places of emigration where people are sending back.
Very elastic, you're saying.
It's very elastic.
And China has its own very well-developed informal payment system. It's not only the underground banks that they're talking about, but there's the Fei Chen variety of flying money that they're using as well.
Yeah.
The other aspect, I think, of the BRICS at least, would be what drives remittances. Well, same thing that drives migration, which is you're looking for better opportunity somewhere. So let's just take Brazil just for a minute. There's a lot of Brazilians in the greater Boston area in Massachusetts. Well, when the Brazilian currency, the real is, 4 to a dollar, you get a lot of people coming. And then as there was more opportunity developing in Brazil, and then recently it was less than 2 to a dollar, well, why am I still working here and let's say underappreciated? Maybe I'll go back home. Well, now it's 2.4, I guess. I was looking the other day because I'm going to go to the World Cup in Rio in 6 months. So I was looking just to see what it was. So it's about 2.4 now.
0.4745.
Okay, there you go.
Approximately.
So anyway, these things are things change. So Brazilians come, Brazilians go back home. Depends on currency, depends on what opportunity, of course, there is back home. But in a post-conflict society, or in a current conflict society, there isn't much opportunity at home, so you're leaving.
It's okay, thank you. My name is Mohammad Mudassir, and I look after workers' remittances for a Pakistani bank. My question is to all of you, actually. When we talk about competing with Hawala system, we normally encourage banks and all the financial institutions to come up with innovations, new systems, net banking, mobile banking, and all these stuff. But if we look at the expatriates who are actually the main source of remittances, majority of them are illiterate. They don't know how to use these banking channels, these mobile systems and all. So I have hardly seen people discussing about educating remitters, especially from the people who come from Pakistan, India, Bangladesh. They have hardly been to any school before, so they don't know all these stuff. So why don't we actually do something to educate the remitters? Because I have found these expatriates more patriotic than the people who are resident of a country. So if you tell them the importance of using a formal channel, banking channel, rather using an informal channel, it can even double the remittances of this 500 billion to maybe 1,000 billion.
Yeah.
So what do you guys think about, I mean, what's your
Well,
point of view on this?
It's absolutely true that financial literacy is extremely important in this area, and there have been some, again, they're usually small scale, but there have been small scale efforts made. Manuel Orozco is one of them who tries this and has tried this in different countries, and they've had good results. But it's expensive to be effective, and that doesn't mean it shouldn't be done. But financial literacy is very, very important, and I think we have to find a way for this to happen. And to do that, you need the absolute buy-in from the authorities in the receiving countries, so that everybody understands it, both sending and receiving. And again, I've discussed this with Professor Pasas in the past. Just at the moment, which would have been 2001, just at the moment in which the United States government was about to undertake a significant financial literacy program in terms of immigrant populations tied to remittances in this country, came 9/11, and somehow that got lost.
There's also a risk in that proposition, and that is that when you educate them about the comparative cost, speed, convenience, and so on, you're going to lose customers rather than gain. I mean, and it is not about Pakistan. I received a check in Canadian dollars. I was doing some work in Vancouver, and they sent me, it was in the upper teens, that included fees, travel expenses, and everything. And I went to my US bank here, and I said, how much will it cost me if I deposit a Canadian dollar check in my account? So, oh, nothing, you are a customer for so many years, and so on. I said, okay, was happy. A happy fool was I, because then I saw what exchange rate they applied.
Yeah.
I lost $2,500 on the exchange rate that they applied. I was furious. I went back, I closed my account, I told them I'm going to use Havala next time.
And they said, what's that?
We're going to take a couple. We're going to
I
take.
needed to educate them.
I want to add here that I think that's a very good question that you asked, particularly with the focus on the senders, because there has been recently a lot of recognition that the senders part has not received the attention that it deserves. There is very little known really what motivates senders to send, what motivates them to choose the particular methods that they use, and how that could be improved. And when we had our focus group discussions here with the African diaspora representatives, it was very interesting that a lot of them, and particularly it seemed to be evident among the second generation migrants, were very interested in various co-development initiatives to benefit their communities. And they were not only interested in sending individual remittances for and sending a remittance just maybe for some community development project, but they were interested in active participation in contributing through knowledge, through new technology. So there is a lot of room here that is definitely worth attention and a lot of potential in that area to improve
We'll take, I think,
collective remittances.
one more question. The issue for formal financial institutions, I think, is you're going to have a hard time competing on just costs for money transfers. So you have to think of it in terms of really financial inclusion, in which you're looking at potential customers who want to be part of remittances, but you also have to think as well as them as customers for maybe a microinsurance product, or perhaps a small loan, or some things that Hawala isn't traditionally involved in. But I think if you think of it more broadly as a financial inclusion initiative for these institutions, it might be a better business model for
And there was a hope, actually, when Pakistan was changing its laws, there was a hope that some of the informal businesses would actually partner with banks and registered companies. But then with the companies A and companies B and what each was allowed to do, and requirements to go through the State Bank of Pakistan in Karachi, and the routing of the money that was required, all these kinds of things, actually, they forced merging of the formal with informal didn't work in Pakistan.
One more question, please.
Hi, my name is Nabil. I'm from Afghanistan. Thank you very much for the presentation. I have a question regarding Hawala system. Basically, I myself used a couple of times Hawala when I was in Afghanistan. I know it's a very important system for the economy of my country, and it helps like a lot of families in Afghanistan. People, they have like family members abroad working, and they send money through Hawala in Afghanistan. But at the same time, it is also understood that it play an important part in financing terrorism activities there. So I could not understand what policies and measures should the government in Afghanistan should take. For example, as father of microfinance, Mohammed Yunus said, the theories he learned in the US, they were not practical in Bangladesh. I mean, these words, for example, accountability, rule of law, justice, these are very nice words, but at the same time, I feel like considering the tradition and the religious beliefs that we have back home in Afghanistan, these are very hard to implement. So what do you recommend in this part?
How many weeks do you have?
I just throw in one thing. You have these informal institutions existing for a reason, because they do provide a range of service, and the question is cost, reliability, etc. If the formal systems are going to compete, they have to be able to provide better or equal service at costs that are similar. Given technology and the rest, it's not impossible, but sometimes I hear people, oh, we have to get rid of the informal, that's bad, and move everything to formal. It's really a matter of having the playing field a bit more even here, and indeed let competition take place in these areas. And indeed the formal systems can play an important role, but we have to find out what.
Well, I mean, very epigrammatically, I would like to go back to what I said earlier. If you are to do something has some chance of success, that's sustainable, it has to have local buy-in, it has to be based on a strategy that brings in different parts of the policy together. You have to have financial integrity, but you have to have integrity, a culture of integrity, as understood and practiced in local contexts, both in the private and the public sector. When you do not have these, and you try to fix Hawala or the bank, what Hawala does now, the bank will do tomorrow, because we know that banks are doing, look at the big fines that HSBC, JP Morgan, and the likes have been paying for doing exactly that. So if they are the financial system, the good and the bad is going to go through there.
Right.
It's not that it is inherently good or inherently bad. It is that it's what people practice. So if you want to reform, keep the good, keep the business model, keep the competitive edge, and have the financial inclusion and all that, you have to have a comprehensive strategic approach where the stakeholders, the different players, come together and come up with a plan. And that's what's missing.
Let me give, sort of as the final word, just a sobering number for the real world. All of the concern about money laundering and terrorist financing and all of these rules and all of these regulations, and oh, wouldn't it be good if you got rid of Hawala, and wouldn't it be great if everybody knew their own clients, and et cetera, et cetera, et cetera. Professor Pazos has noted that these paragons of virtue, the big, formal, regulated financial institutions are constantly not just getting their hands slapped anymore, but some substantial fines because they don't seem to be paying too much attention to some of these rules and regulations. So here's the sobering number. Professor Pazos told me this many years ago after some forensic accounting. And with the full knowledge that this is being driven by post-September 11th, that the 19 young men who were in the United States during that period of time, their total financing was somewhere between $200,000 to $250,000 over 2 years. And all of that money came to them through the normal, regular channels. The bombing in Madrid was $50,000, I think, in terms of the
It
financing.
it depends on the value of the
Okay.
street or other, it was barter. There was also
The point
drugs.
is, and I don't expect the policymakers to ever acknowledge this. They always talk about draining the swamp, et cetera, et cetera, et cetera. To be realistic, with all of these flows that are taking place, you think you're going to stop $200,000 to $250,000 from coming into a country over a 2-year period of time? You are not. And so to single out sort of hawala, bad, formal financial institutions, good from a perspective of money laundering or terrorist financing, is counterproductive. So with that, we can stay. We can all stay. I think later if you have individual questions, but thank you all for coming. Very much appreciate it. Hope you learned something. We have too.